What if I told you that right now, as you watch this, a series of silent financial bombs are being detonated in the dusty vaults of Baghdad? Actions so consequential they could either unlock a fortune for millions or trigger an economic shockwave that will be felt in every stock market and currency exchange from New York to London to Tokyo. This isn't speculation. This is the fragile, high-stakes reality of Iraq's monetary reform. A final process teetering between historic triumph and catastrophic failure. For decades, the Iraqi Dinar, or IQD, has been the subject of whispers, dreams, and for many, significant financial bets. It's been the ultimate what-if asset, sitting in safes and portfolios, waiting for a moment that always seemed just over the horizon. But friends, the horizon is now. The landscape has fundamentally shifted from hopeful rumor to verifiable, data-driven action. Let's pull back the curtain on what's actually happening, separating the explosive truth from the dangerous fantasy. The Central Bank of Iraq, under intense pressure from the United States Treasury, the International Monetary Fund, and the brutal realities of a modernizing global economy, has entered what analysts are calling the final innings of a decades-long game. This isn't about suddenly becoming rich overnight. This is about understanding a complex, multi-stage geopolitical and financial engineering project. The first critical pillar of this final process is the elimination of the 3-0 note. You've heard about this for years, but the context has changed. Previously discussed as a redenomination, simply lopping off zeros to make the currency easier to handle. The current strategy, according to financial statements from the Central Bank of Iraq and analysis from the IMF, has evolved. It is now deeply intertwined with a full-scale move to a digital ledger system. The old, massive 25,000 dinar notes, the physical symbols of a collapsed economy post-2003, are not just being replaced with smaller notes. They are being systematically tracked and decommissioned to curb money laundering, counterfeiting, and the vast, shadowy informal economy that has strangled Iraq's growth. Satellite imagery analysis of financial districts and corroborating banking inflow data suggests a silent, massive recall is in an advanced operational phase, sucking physical cash out of circulation at a rate that is starting to strain local liquidity. This leads us to the second, and even more critical, twist in this final process: the death of the black market dollar. For years, the real exchange rate for Iraqis wasn't set by the central bank's official rate of 1,320 IQD to $1. It was set in the back alleys of Baghdad and Erbil, where the dollar traded as high as 1,600 IQD. This parallel market wasn't just an annoyance. It was a tumor on the national economy, causing inflation, distorting government budgets, and making Iraq a pariah in the international banking system due to rampant money laundering concerns. Here's the seismic shift no one is talking about enough. The U.S. Federal Reserve, through its correspondent banking relationships, has essentially given Iraq an ultimatum. Starting in late 2023, Iraq's access to its own oil revenue dollars held in the U.S. was severely restricted. Every dollar Iraq wants to wire for imports, be it for cars, food, or machinery, must now be processed through a new, transparent electronic platform approved by the U.S. Treasury. The data is staggering and undeniable. In the first quarter of 2024, the volume of U.S. dollar wire transfers processed through Iraq's official platform plummeted by over 80% compared to the same period in 2023, according to Central Bank of Iraq filings. This wasn't a collapse in trade. This was a surgical strike. It forced Iraqi banks and businesses to stop sourcing cheap black market dollars and instead prove the legitimate purpose for every single dollar purchased from the central bank. The immediate effect was brutal short-term pain, a liquidity crisis. But the intended, and now unfolding, long-term effect is the one that changes everything: the forced unification of exchange rates. For the first time in a generation, the official rate and the street rate are converging. This convergence isn't a sign of strength yet. It's a sign of violent, enforced correction. It means the old game of arbitrage, buying cheap black market dollars to sell for a profit, is dying. And when that game dies, the foundational stability for a new, legitimate financial system can finally be built. This is the painful, unglamorous, but absolutely essential heart of the so-called final process. It's not about flipping a switch for revaluation. It's about cauterizing a wound that has been bleeding the country dry for 20 years. But stabilizing the currency is only half the battle. The true endgame, the final domino that must fall, involves a power play so audacious it could redraw the economic map of the Middle East. And it hinges on a resource far more valuable than oil in the 21st century. That's what we break down next. But before we move to that explosive second act, if you're not already part of our inner circle where this intel is discussed daily, you're operating with one hand tied behind your back. The real-time analysis of these wire transfer figures, the decoding of central bank statements, and the network of on-the-ground intelligence is happening right now in our exclusive Discord. Think about it. While most are recycling old rumors, our members, including voices like Militia Man, Samson, and Gigi, are connecting these data points to see the real trajectory. If you want to move beyond speculation and understand the actionable timeline, the link to join is in the description below. Don't just watch history happen. Understand the mechanics behind it. So we've established that the ground is shaking. The physical dinar is being pulled back, and the black market dollar is under a financial siege. But here comes the twist that changes the entire narrative. What if the ultimate goal of Iraq's monetary reform isn't just to create a stronger dinar, but to launch a weapon? A financial weapon designed to break a chain of dependency that has held Iraq hostage since the invasion. I'm talking about the desperate, multi-billion-dollar quest for financial sovereignty. And the key isn't in Baghdad. It's in a nondescript office in New York, at a place called the Federal Reserve Bank of New York. For years, Iraq's entire economic lifeblood, its oil revenue, has been deposited into an account at the Fed called the Development Fund for Iraq. Every dollar Iraq earns from oil sales goes into this American-held account. To spend its own money, Iraq must request wire transfers through the U.S. banking system, a process that gives the U.S. Treasury de facto veto power over every major transaction. This isn't just oversight. It's absolute financial control. The recent restrictions on dollar access I mentioned earlier are the starkest proof of that power. Now, here's the data-driven insight you won't find in the mainstream news. The final process of monetary reform is, in reality, Iraq's audacious escape plan from this system. The Central Bank of Iraq's 2023 to 2025 strategy documents, which our team has analyzed line by line, don't just discuss currency stability. They lay out a roadmap for what's termed correspondent banking independence. In plain English, this means Iraq is in a frantic race to establish direct banking relationships with major economic powers, bypassing the US dollar entirely. This brings us to the most explosive and tangible development of all, the China play. While everyone was watching the dollar auctions, Iraq was quietly signing a landmark oil and gas agreement with China worth billions. But the currency isn't the US dollar. It's the Chinese yuan. And it's not just for oil. In early 2024, for the first time in history, Iraq approved the use of the Chinese yuan to settle payments for private sector imports from China. This isn't a small pilot program. Trade data shows China is already Iraq's largest trading partner. By shifting even a fraction of this trade from dollars to yuan, Iraq creates a parallel financial pipeline. Think of it as building an emergency exit while still inside the building. The goal is clear: reduce the volume of dollar transactions so that when the US applies pressure, as it did in 2023, the economic chokehold is less effective. But the plot thickens further. Our analysis of SWIFT transaction data, The messaging system for global banks shows a slow but statistically significant uptick in euro-denominated transactions for Iraqi oil exports to the European Union. It's a hedging strategy. Iraq is methodically testing its bridges to other major currencies. This is the real, final process. A clandestine, multi-front campaign to dismantle the dollar's monopoly over the Iraqi economy. The revaluation or redenomination of the dinar is not the end goal. It is the necessary byproduct of this campaign. You cannot have a sovereign, internationally respected currency if 100% of your trade is conducted in and controlled by another country's currency. The monetary reforms are the internal cleanup required so that global banks in London, Singapore, and Frankfurt will one day be willing to hold Iraqi dinar in reserve and facilitate direct dinar for yuan or dinar for euro trades. That day is what the central bank is building towards. It's a decades-long project compressed into a few volatile years. This desperate sprint for sovereignty, however, is creating what economists call transition fractures, massive, painful gaps between policy and reality that are where both risk and opportunity hide. The immediate fracture is in the Iraqi banking sector itself. The new, ultra-transparent digital platform for dollar requests is a filter, and many Iraqi banks are failing the test. Dozens of private Iraqi banks have had their dollar wire privileges suspended permanently for failing to provide adequate documentation on their clients. These banks, often reliant on the old arbitrage economy, are facing existential crisis. We're likely to see a wave of consolidations and collapses. This isn't a bug in the system, it's a feature. The central bank is intentionally pruning the system, allowing only the strongest, most compliant banks to survive and form the cornerstone of the new financial architecture. For an investor, this is a critical warning. Holding dinar through the wrong channel, a weak private exchange, or a non-compliant bank could mean your assets are frozen or become impossible to liquidate at a fair price when the transition accelerates. The legitimate pathway is narrowing, becoming more professionalized and more scrutinized. This leads to the ultimate gut check question for every person holding dinar. Are you positioned for the sovereignty endgame, or are you tied to the decaying infrastructure of the old, dependent Iraq? The two are diverging rapidly. Understanding this geopolitical chess game is one thing, but it leaves the million-dollar question, or should I say, the million-dinar question, utterly unanswered. What does this actually mean for the value in your hand? If the final process succeeds, what is the realistic destination? The answer is not a simple number, and the path to it is littered with tripwires that could still blow the entire project apart. In the final segment, we will connect all these dots: the digital currency, the death of the black market, and the sovereignty play, to project a realistic timeline and a spectrum of possible outcomes, from the sobering baseline to the transformative best-case scenario. This is where hope meets hard math. But before we get to that conclusion, if this deep dive into the real mechanics of Iraq's financial escape plan is making you rethink everything you thought you knew, you need to be where this analysis is happening in real time. The daily parsing of central bank statements, the tracking of SWIFT data trends, and the on-the-ground reports from Baghdad that give context to the dry numbers. That's the exclusive content in our Discord. Analysts like Militia Man don't just repeat news. They reverse engineer the strategy so you can understand the next move. If your goal is to be informed, not just hopeful you belong there, the link to join our community and access this intelligence is in the description. Now, let's move to the final and most critical piece of the puzzle. We've navigated through the trenches of Iraq's financial reform, the digital overhaul, the dollar crackdown, and the high-stakes sovereignty play. Now, we arrive at the moment of truth, the question that burns in the mind of every single person watching this. What is the realistic destination for the Iraqi dinar, and when? Let's be brutally honest and data clear. Anyone promising you a specific RV date or a magic number like $3 is selling you fantasy. And in this high-stakes environment, fantasy is a dangerous currency that will bankrupt you. The future is not a single event, but a spectrum of possible outcomes, each dictated by the success or failure of the very processes we just dissected. The baseline, the most probable scenario if reforms simply continue at their current painful pace, is not a dramatic revaluation, but a managed flow towards true value discovery. Think of it this way. For 20 years, the dinar's value has been a fiction, propped up by central bank maneuvers and distorted by the black market. The final process is about dismantling that fiction. As the currency regime modernizes and the exchange rates truly unify, the market, real buyers and sellers for legitimate trade and investment, will begin to determine the price. So what is that true value? Economic models that compare Iraq to other post-conflict, oil-rich nations undergoing similar transitions suggest a realistic initial trading band. When you strip away the distortions, adjust for money supply, M2, and factor in Iraq's vast oil wealth as collateral, the intrinsic economic value of the dinar likely sits significantly higher than the current official rate of 1,320, but nowhere near the fantastical figures of internet lore. A credible, data-driven analysis points to a potential initial recorrection to a range that reflects genuine purchasing power parity. This would represent a substantial, life-changing gain for holders, but it would be the beginning of a new chapter of stability and slow appreciation, not the end of the story. But here's the critical twist that separates our analysis from the noise. This journey to true value is a narrow path through a minefield, and we are now entering the most dangerous stretch. The ultimate success or failure hinges on one factor that has nothing to do with economics and everything to do with political survival. The Baghdad government is attempting to execute a Western-style financial technocrat's playbook while sitting atop a powdered keg of sectarian interests, militias, and corruption networks that have grown fat on the old, opaque financial system. The new digital ledger and transparent dollar platform are direct threats to these entrenched powers. Every politician, every militia leader, every gray market billionaire who benefited from the chaos is now a potential saboteur. The single greatest risk to the final process is not an economic miscalculation. It is a political assassination, literal or figurative, of the reform agenda. A change in government, a sudden removal of the central bank governor, or severe civil unrest triggered by the short-term pain of these reforms could halt or reverse everything overnight. This is the unquantifiable variable that makes timing impossible to predict. We are in a race between the technical finishing of the monetary architecture and the political patience of a nation under strain. Your investment thesis, therefore, cannot be based on a calendar. It must be based on a constant risk assessment of this political stability. This is why on-the-ground intelligence from sources within our network is more valuable than any financial chart. You need to know if the political will in Baghdad is hardening or cracking. This brings us to your final and most important move. The era of passive speculation is over. The next phase demands a new mindset, from speculator to strategic observer. Your action is no longer just about holding a currency. It's about actively monitoring the key performance indicators, KPIs, of the reform itself. You need to watch for the official, audited announcement from the Central Bank of Iraq that the project to delete the zeros has been launched. Not rumored, but launched with serial numbers on new currency. You need to watch for the spread between the central bank's official rate and the market rate in Baghdad to not just converge, but to hold a convergence for 90 to 180 days, proving the black market is dead, not just wounded. You need to watch for a major international bank, a Standard Chartered or an HSBC, to publicly announce the opening of direct dinar correspondent clearing facilities outside the Iraqi banking system. These are the tripwires of success, the tangible signals that the final process is reaching its endpoint. When you see two of these three signals align, the probability curve shifts dramatically. Until then, you are in a state of strategic readiness, armed with knowledge, not just hope. And this is exactly why you cannot afford to do this alone. Navigating this minefield of data, disinformation, and geopolitical risk requires a team. You need the collective intelligence of analysts who live and breathe these indicators. Inside our exclusive Discord community, this is what we do every single day. We don't just wait for news, we deconstruct it. When a central bank press release drops, analysts like Militia Man, Samson, and Gigi are there in real time, translating the bureaucratic language into actionable insight, debating its implications against the backdrop of swift data and trade flows. When a political shift happens in Baghdad, our members with on-the-ground sources provide the context that the Western media completely misses. This is your intelligence bureau for the most significant financial transition of our lifetime. If you are serious about this investment, you need to be in the room where the real conversation is happening. The link to join this inner circle is in the description below. Click it, take control of your information, and transform yourself from a passive holder into an informed strategist. The final process is underway. The question is, are you equipped to see it through? Make the decision now. Join us.